Welcome to Undercover Analyst. China's top selling developer, Evergrande, became the news headlines for its unprecedented debt crisis in the country's property sector. It was facing a liquidity crunch since the mid of 2021. China's Evergrande has filed for US bankruptcy protection as a part of one of the biggest debt restructurings in the world. This news has anxiety growing over Chinese worsening property crisis and its impact on the weakening economy. China unexpectedly lowered several key interest rates in a bid to lessen the struggling activity and is expected to cut the prime lending rates even further. So, are these measures enough for China to stem the economy and get them out of the real estate problem? If you look at the GDP growth rate of China, in the past, it has already been in a downward spiral. The 7.8% increase in GDP in 2013 is only now down to 3% in 2022. So that's a huge decline in the overall GDP growth rate. Chinese real estate market is huge. According to Goldman Sachs, the total value of market hit $52 trillion in 2019, and that's twice the size of the US residential housing market. Real estate in China is empty. An estimated 65 million homes, that is 20% of the total supply in China, are unoccupied, which means the developers are not able to sell those to anyone in China. Not only this is high by international standard, it means there are enough empty homes in China to house the entire population of France. This is just to show you how big the real estate problem is. The property sector is about 1/3 of the Chinese economy. And if this comes under problem, we are looking at a further downside in the Chinese growth in the coming years. Evergrande was China's top property developer. However, the company struggled to stay afloat in 2021. It has 1.6 million undelivered apartments and has more than $300 billion of debt. That debt makes it the most indebted company in the world. The bankruptcy could be disastrous for Chinese homeowners who hold 70% of their wealth in real estate. So, a common Chinese man has a lot of money invested in the real estate rather than the stock market or gold or any other asset class. Fears of the company collapsing in 2021 have sent a ripple of fear throughout the world's number 2 economy. The stock market around the world has already felt the fear. So what's the news now? Evergrande has sought protection under Chapter 15 of the US Bankruptcy Code. The Chapter 15 bankruptcy allows a foreign debtor to file bankruptcy in the United States. The creditors will not be able to sue them under the Chapter 15, and they can continue their restructuring work during this period. It is used for insolvency cases that involve people or businesses with assets in more than one country. So what Evergrande has done is it has filed for Chapter 15 bankruptcy protection. Evergrande's offshore debt restructuring involves a total of $31.7 billion, which includes bonds, collaterals, and repurchase obligation. A string of Chinese property developers have defaulted on their offshore debt obligation since Evergrande ran into trouble, leaving unfinished homes and unpaid suppliers, shattering consumer confidence in the world's second largest economy. So let's try to understand what exactly is wrong with the Chinese real estate market. To understand, we'll have to go back and see how the boom started in the real estate. Boom in China's real estate started in the 1990s when people began migrating from the countryside to big cities. These migrants were provided with government apartments, which they were allowed to buy later at heavy discount. This provided a golden opportunity for real estate companies which had access to cheap loans. This reality boom, probably the world's biggest, allowed companies like Evergrande to become a giant. Not only Evergrande, but thousands of smaller companies mushroomed in the Chinese market to satisfy the ever-growing demand for homes. Evergrande was probably one of the biggest in those new real estate companies, and if you see the revenues of Evergrande, it has been constantly increasing for the past decade. Here's a little estimate In 2004, Evergrande's revenue was only $0.2 billion. Fast forwarded to 2020, and the revenue grew to $79.8 billion. It serves as a cautionary tale about the growth at all cost model which China has adopted in the past 30 years. Let's look at the growth driver. With the expansion of the real estate sector, the Chinese economy saw a period of rapid economic growth. Between 1990 and 2015, the economy grew at an annual rate of 7.5% on the lower side to 14.2% on the higher side. In 2017, the real estate sector accounted for 28.7% of the GDP. That's roughly one third of the GDP. Comparing that with UK, which was at 20%, and the US at 17.3%. What happens when real estate prices go up? Other companies simply would just mortgage their properties and get the extra funding for their business. And this creates a huge leverage in the economy. What happens when we have a huge leverage in the housing sector? We have already seen in the 2008 financial crisis in the United States, the main reason for the crash was the unprecedented lending on property value. Then came the COVID. While the seeds of current crisis were sown back in 2008 financial crisis, China's economic growth also started to slow down after 2010. And if you see the growth rate, it has considerably slowed down from 2010 up to 2015. Here is the graph to show you since 2008, it has already started to slow down. Then came the COVID pandemic. Banks grew more cautious about lending money to developers because there was already so much of unsold inventory that the banks were getting nervous for lending money to the developers. The inflow of cash started drying up, slowing the pace of the development of housing projects. From 10.6% in 2010, the GDP growth rate in China fell to 6% in 2019, and the COVID-19 pandemic further hammered the economy. The slow growth led to lower disposable income for household, and less disposable income means households started putting less money in real estate. Now, this is by far the most important point why we are in this situation. It's called the three red lines. So what exactly is three red lines? In 2020, when the Chinese government realized it could not keep lending money to real estate firms with the same easy terms, the three red lines policy was introduced, mandating property developers to maintain three fixed ratios to get access to more credit. The first was liability to asset ratio should be less than 70%, which means there should be an equity of 30% on the balance sheet. The second was debt to equity ratio should be less than 1, which means you can only have so much debt as much as you have equity on the balance sheet. The third and the most vital one was cash to short-term debt should be more than 100%. So if you have a short-term payment liability of $1 billion in a year, you should have at least $1 billion of cash on the balance sheet. What happens after this three strict red line policy? Over half of Chinese firms and China's top developers failed to meet the requirements. It clearly says in this Bloomberg article, 2/3 of China's top developers breach a red line on debt. So this is where the problem exactly started. Another big concern is the demographic concern. If you see the urban population growth rate in China, it has fallen from 4.1% in 1996 to 2.1% in 2020. What does this mean? This means that people migrating from villages to the urban areas in China has slowed down considerably. So why does this matter? This matters because the demand for housing has started to slow down because lesser people are moving towards the urban areas. China is also struggling with the rise in the number of older people. If you see the unemployment rate among urban youth, it has steadily increased. There was a record 21.3% unemployment rate in June of 2023, and this is the biggest concern for the Chinese president to try to solve. Beside these, the Chinese economy is yet to recover from strict lockdown imposed during the pandemic. So, how is China planning to deal with the real estate debt? Beijing is already pressuring government affiliated developers to buy the assets of Evergrande, and this is in order to bail out the big company out of its blood guianing debt. It announced that it would sell off $1.5 billion of its stake to Shenzhen Bank, to an investment company that manages Chinese state assets. The other important concern among investors is the availability of timely economic data in China. Access to some information has been increasingly restricted by the government, and so the world over there is a nervousness, and the analysts are not able to understand how bad is the Chinese real estate market. If you like this video, please share, subscribe,